呢個梳梳下頭。喂呀！Hi everybody, this is Phillip Guan, CPA. So welcome to the training to how to do tax return. This is class number 7. And we have been learning a lot of different scenarios. And yesterday we learned in Schedule C, self-employed. The day before we learned Schedule E. And we have been learning W2 income input. We're learning dependent. We're learning childcare, advanced childcare credit, dependent care, as well as educational credit. We learn a lot. Okay. Today we are going to take the class 7. Guess what we are going to learn? Let me see. Okay. Class number 7 is. Did I share my screen yet?
No, not yet.
Not yet. Okay. Let me share my screen. Thank you, Brian. So I am getting this. I'm supposed to already open, but nevertheless. Okay. I open in half screen in here because I'm going to share my screen. I'm going to be split my screen together. So now, as you can see, we continue learning W2. Now, here's something new. It's called K1. I point out about the K1 in, I believe yesterday, at the end, when Christina asked me questions, I said, how to use legally save the self-employment tax, which by incorporated, right? So, and then that's how the K1 comes from. There's like S corporation, partnership, or LLC, they all produce different kind of K1s. And then we have a dividend, estimate tax, we learned about that. And we did not learn about the overpayment. So this is going to be the very first time to learn about that, okay? So now, this is a taxpayer, it's called right angle, okay? And their W2 income, as well as dividend income. And those are old stuff which we know how to do it. And we also have, hey, guess what this? This is self-employed. That's similar like yesterday we talked about the self-employed. Yesterday we talked there's a store, there's a business, but this one somebody who provides an independent contractor a service to somebody who listed a 1099 NEC. That is called considered self-employed. So it's going to report it in, Brian, guess what this 5,000 is going to report it in? Or Samantha, Brian, or any one of you. Guess what this 5,000 is going to report it in? We talked about it yesterday. What is it? What is that? Schedule
C.
Yes, correct. Schedule C, self-employed business. We will touch it in a little bit later. Okay, so this is the K1, the business. Okay, so now, do you also notice the employer is partners? So in here, there's a K1 from there. So basically, this is a partner who receive the K1 and the W2 in here. So now, I am going to put this one in the 2021 tax return. Okay, so I want to show it to you. I want to stop sharing first because I don't want to show the rest of the client information, and then I'm going to share. Remind me to share, okay? Once I find the clients. Okay. It's going to be very quick. It's not going to be take long. Okay. I just want to protect my client's information. The one that I created for the training purpose, they don't have this kind of information. The software asking for update. It's just take a few seconds. It's not going to be long. Okay. So now, I am going to, once I get into that client, I'm going to share screen with you. Okay. Just give me 1 second. I need to protect my clients. 400. And today is 7. So this is called right angle. Okay. I am going to get this. Good. Okay. I am. Sometimes when you do a share screen, it's funny, and they are not working very well. Now let me do this. Okay, share screen. I am getting this 2021. Okay, now I'm able to share my screen right now. Thanks for waiting. Okay. And the information in here, it doesn't. No. It's funny when you go to share screen and they pop to another screen. I have to do it again. I want to share both screens together. That's why I do this. Now we're good. You guys can see both sides on the screen, right? Can you?
Yes.
Yeah.
Oh, good, cool. Now the client. So as you can see, we have 3 color on the left side of the screen. Some black color, which is naturally, that means no data have been input. There's some blue color, which means there's some data have been input. So what is the green color stand for? The green color stand for that this information have been lowered over from the year before. We need to double check, make sure it's right. So as you can see in here, I use this client to doing some estimate things. Do you see this test client text list may not be right in here. So let's say in here, this is attorney, it's a lawyer, okay? So it's called right angle. Now in here, this right angle information basis is all in here, right? It's a single person. Now here. So health insurance, got health insurance coverage. How to get out of this? Sometimes right now I'm beginning to ask you guys questions to try to refresh your memories what we learned over the different classes. You know it, you yell it out. Believe me or not, there's gonna be help you to get your mind fresh. So how can I get out from this screen?
Is it escape?
Cool. Yes. Or close, either one. Okay. So now, what I want to get out from here, escape again. So can you see it? Or I can close it from the right hand corner, either or. But when your hand is in the keyboard, escape probably is better, and also you don't hurt your mouse, your right hand. When you use your right mouse, sometimes it hurt a lot. So now, no dependent, not married. So 2, 4, 4, 2, 3, 4, 5, empty. You remember they say there's one subject, it's called estimate text. So we should have estimate text to let's follow the estimate text somewhere. They're going to tell us what estimate text they have been put in. Like here, I highlight it right now. Now, the first thing is there is a 5,000 that 2021 tax return. After doing it, there's an overpayment. It's supposed to be either refund or apply it for the year of 2021 tax return. I am using 2021 tax return to do it right now. Okay. So now, at this moment, I open the tab after number 5. There's no number. You just click ES. So when there's a search button boxes on below, you can type ES and enter, or you can go straight like here. To go to here. The RS is taxpayer. Now, the first thing is this: 5,000 from last year. Got it? Now my wife is gonna help me to get a check. So I mean, okay. Right. So now, in here, we are going to put the estimate tax. How much? They have been every quarter make 30,000 because as a lawyer, it's making good money. So you need to prepay tax. Why need to prepay tax? Otherwise, you need to. There's a penalty. Now, we finish this.
Fourth quarter, 2022.
Good catch. I actually purposely make a mistake for you. So in here, so it's a good catch. Yeah, this is 22. You're right. For the year we are going to do is all 22, 22, 22, 23. Okay. Now, since there's an estimate tax from last year, so this is for the year before, and this is for the year for the coming year. And let's say if there's some extra, we're going to use it, and then this, we're going to use this. Now, normally, they will also need to have estimate tax for state of California. Let's say if they're in the state of California. But in this example, they only focus on talking about the federal. Okay. I try to round it up like this. So now I put everything as California. So I changed the zip code. Okay, to this. So that way I can also teach you the California state tax. We are located in state of California. Okay, so now RS, normally the ID is state of California, right? State of California ID number doesn't look like this exactly. I just for example purpose. Now, when you have a green, you either click, just hit anything. And again, now if you want to get out from here, escape. So now, escape one more time. We're done with this, and it's blue out right now. So we're done this. So now, the next thing we are going to do is, let's look at the W-2, okay? So when you working on the tax return, if you work at home, you can do it like this. Buy a good laptop, get the HDMI, get a good size of monitor, or I even get the 43 inches TV. Still works. Work very well, very comfortable. So that way you can split the screen. So now, this is W2. So hit W2 in here. And the cool thing about if they're your old client, they've been all those basic information have been in there. You don't have to input. Pretty good, huh? So all you need to do, box number 115. Okay, now the system is going to give you box 1, 3, and 5 the same. Not necessarily always the same. Let's say, for example, if this person have 401k, for example, if that person, let's say, put, for example, 15,000 in there. So what you're going to do is you have to minus 15,000 from box number 1. It's like this. You don't change. The person, the employer accounting department does. You as a taxpayer, you look at you as the tax preparer, you base on the client's information to do it like this. For example, let's say if the client provide you box number 1 is 100,000 like this, and box number 3 and box number 5 they still 115k. Basically what that means is 15,000 401k is not subject to 2021 income tax, but it's already paid Social Security and medical tax and Medicare taxes. That's what it is. Okay. So now back to this example. It is like this, no 401k. When you change one thing, you got to make sure you change others. So now, I change this one to state of California. Okay, I assuming there is 10,000 state of California tax, and also I also assume like that. Now, this is W2, we're done. If there's a more W2, how are we going to do it? If there's another W2, page down. If one more, page down, page up, and page down to access different W2 for the same taxpayer or spouse. In this situation, there's no extra, there's only one. Now we're done with this. Now let's do dividend. Follow the sequence. Do you see dividend? It's already blue. That means this person have the same investment company. You see it? Ordinary dividend is qualified dividend is, so this person have the total amount of 2,200 dividend. All of them are qualified, which is pay less tax. So want to get rid of it, want to get out of it, it's okay. So we finish this. Now, do I have to, like, let's say you double click in there, you can put all the address, all the thing in there. Do I have to put all this in there? No, you don't have to. You can come here, just input in. Those are required information. The less information are optionals for trade tax software, as well as for the tax return. So now we go to this 1099 NEC. Guess where we are going? First time. Who knows which tab we are going to use? Are we going to in the general tab, or are we going to in the income tab, or are we going to in adjustment tab? General, income, and adjustment. Which one we are going to go?
Income.
Income, right?
General.
Sales employee income.
That's right. Like here. Under income, under second tab. We finished the general tab already. So, like here. We come here. Like here. Now, in here, you was able to put in the income. You also able to write off some expenses in here. But if you just put in adjustment or there's another person, another places, you just put in the income, you won't be able to put the deduction. But this is the best way to do it. Now in here is in consulting, okay? They put in consulting. Now it's a form 99 from this company, and that's how you put it in. Now you put in the business code for consulting. Now you can move this one a little bit so that way you can have more space. You can see the whole thing. Now like this, okay? Now the rest of the thing, unless you have an office other than your home, you need to put your office address. Otherwise, the system is going to pull your home address in here, which is if you only doing it for consulting, you are an independent contractor, you don't have an office other than your home. So your home address will become your business address. You also qualify to take the home office deduction. 8820 right here. It's a double benefit. Let's get out here. So in here, there's a 5,000. The example does not provide any expenses, which is not normal. Normally, provide a consulting business, they always use computer, they use car, so there should be a mileage, there should be a computer to associate with, and then also other necessary expenses. Let's say, for example, let's add on, assuming this is now on the far left corner, click. You see the highlight portion for what? For which one? Schedule C, F, E, D. Which one? C.
C. Cool.
So we are doing the mileage for the C. Okay. Now let's say, assuming Toyota. Okay. Assuming you got a Toyota, you happen to bought a brand new Toyota in this year, and you use a mileage. Okay, and you also available to do it at work. You have a business. You don't normally, if you're single. Well, some people have 2 cars, but in this situation, let's say assuming this is the only car this person have it. There's an evidence, yes. In written, yes. Let's say if this person who doing consulting and all will also need to go to the client's places to provide consultation. So need the car to move around to the client places. So now let's say they're using about 3,000 miles. Okay. Now, in a real situation, you normally don't go to the even number like this, like normally like that, right? Because it's an even number. How come they could be at the end of the year? In most situation, it's gonna guess you, hey, you maybe guessing. So now the commuting, let's say in this situation, this person not using this car as a primary for the business. They may be using more. Let's say, for example, you should 10,000. But also in the real life example, you are not going to suggest you to do like this. You, let's say, for example, like this. You can force mileage, which you're not going to consider those, or you can put the rest of the expenses in here and let the computer software to figure out which one is better, not both. So in this situation, we take life easy, just like this. So escape. Guess what this one is going to get you? This is going to get you some good deduction for your mileage. Now, let's say you have a computer, and on the top first, you have to see what is this asset used for, right? Like here, Schedule C. Now, when you have only one Schedule C, you don't need to put a 1. But if you have more than one Schedule C, you need to identify as 1 or 2. Okay, in this one, there's only 1. So let's say you got a computer to use it. And let's say you also bought this computer at the earlier the year. Now, if this computer is 850, now you're using this computer quite often for the business. Let's say if you're using about 50% for the business, and the rest of that use it for personal. So in here, you are going to choose this and put 5 years. You also have some office expenses. Let's say you have $355. That's it. That's it. For example, now what is going to get you? And also, let's go back to here. C is reasonable. Real. We haven't finished all the input. We still have a K1 to input. But I want to show you what it looks like in the Schedule C. And then I'm going back to input the K1. Okay, it's coming up. Now in the Schedule C, we have 5,000 in here. The computer, let me see. I think I make it, it doesn't make things right. They're over 5 years and then do it like that. So now, the computer doesn't give a lot because the computer only 850, but half of it is 425 and then divide by 5. Okay, so now your Schedule C is going to look like this. There's a 5,000 income. There's a mileage. The mileage, you can see it from here. The next page is the car auto is right here. The auto actually came from here. So this is what we input. Do you remember that? And this is how the Schedule C comes out like this. Now, the W2, we go back to here. We check the EIN number. Do you notice we changed the EIN from year to year? Do you see it? But I need to go back to change it. It was 20, and in here the EIN is different. So let's say, assuming I make a mistake, I go back like here. Now, if I don't make it right, when I do e-file, I'm getting in trouble. Now, they also so now after you input each and every items, I want you to, like me, to check each and every items is correct. Now, in here, do you see there's still MA? No, and do you remember I changed it to CA? how to change this whole thing. So here's how to do it. Go to here, even there's no spouse, and go to spouse, click, and then go to here, and then going back to T. Now, because the original information rolled over from last year, tax software, it was MA, and I just changed it for state of California for illustration purpose. So now, when I go back to look at it, I will be able to see the W2 down here is CA. Also down here is CA. Now, remember, we have a dividend, which like here, and down here we have a more detailed dividend list, which shows qualified dividend and organized and ordinary dividends. There is no interest on this example, right? So now, what do we miss? We still have a K1. A K1 is like here. Like here. In second tab, okay, income. Continue, go down. Do you see the two places is blue out? One is K1P, the other one is K1S. I think I use an example. But in this situation, it is a partnership. Do you see general partner? It's a law firm general partnership. Guess what is going to happen? Now, first, the partnership EIN is 004006012. Change it year after year to year. In here. So now, 50% profit and loss in there. It doesn't need to put it in here. Okay. So now, the ordinary income is like here, 372,303. Now, cash distribution. Cash distribution is in general partnership first. We check this little box first. Like here. Now, the cash distribution is like here. $372,303. Now, we do up to here. We do here. But there's one more. SE earning. What's this? Well, it's in box 14. Now, in the actual K1, it's better to read because they show you the different boxes. You just look at for the box number and then put in A. Now, this is going to substitute self-employment tax. Now, in here, under line 20, right here, click this K11, right here, K199, and then K1P. So I want to make sure the EIN is correct. They change the EIN from year to year, which is not supposed to. Now, we put the QBI in there. We access this way. The third tab, there's nothing need to input. And there's a fourth tab. We escape. We go back to K1. The fourth tab, we need to have an input. Now, adjust spaces. This is the adjust spaces. Sorry, I need to change it. Change it to 1 million. And they show it in the partnership K1 right, left, right, in the left side bottom of the K1. The left side bottom of K1. It shows all this. Now, we get rid of this. Escape. And we're going back to this. Go to tab number 2. Go to this, which I did not put in. Yeah. This number 3, 2. This input is going to enable you get another 20% deduction. So this is important. Okay. W2. So we have been input all the information in here. Now, we go to here, escape. So I want to show you. What it looks like when we check this little box. Let's check this box. There's nothing in here. Now, state of California. No. From here, you have to be like delete this in order for you to delete this state. Prior information. Now, state of California. The third tab, tax, like here. Check this little. Close this. The fourth tab, health insurance on the top. There's health insurance. State of California, charge penalty if you don't have health insurance. Now go to general, go to escape, general. In here, let's say put today's date. And also put the special code for now. In here, most of the clients, they don't have identified protection PIN, and then the computer generate the PIN. But if the client have it, they will receive it from the mail, and then they can let you need to input in here. Husband and wife are different. Sometimes one person have it, the other person does not. And each and every year difference. They need to have it. Now, if they get lost, they have to be send a letter to the IRS and then I was going to resend it. They will not be able to get it from the phone. Okay. As a matter of fact, they had to verify those ping in order to get access information. So now, and to sometimes they need to be, if they get lost, they cannot find it and doesn't have enough time to get the ping, you can mail it in with the tax return. Now, in here, there's some green check mark in here. So if you want to get rid of all green check mark, Shift Control space, you're going to get rid of all the green check marks. So now you hit calculate it. They're going to tell you if there's anything in here. Yes, because there is no this EIN number, because they changed the EIN number. I believe the EIN number, make sure it's correct. And this is correct. Do like this. I believe there's another example of the K1. That may be the problems. So I go to this one. I delete this. I delete this. So now, let's look at it. The EIN of that, I'll fix it. It's basically the say the EIN in there is not matching with. So we need to fix it and to get it to. So now it's supposed to write right now at this moment. Okay. So now let's look at the finished product to view. The finished product of this tax return is like this. This is, well, obvious. You see there's an angel one because when you practice, you put the one in there. So, but in the real tax return, like that. So you need to make sure each and everything is correct. The client trusts us to do the tax return and make sure every letter, every number is correct to the best of our knowledge. So now, in here, there's a W2, and there's a dividend, and there is the K1, right? And the K1 subject self-employment tax. So now, we also get the Schedule C net to this and go to Schedule 1, like here. And this is a K1, come to here, and net together, go to here. And minus half of self-employment tax as a deduction. So this come to here, add together, adjust, that is a half of self-employment tax, get to this, minus item standard deduction. Hey, do you see it like 13, $25,011? That's called QBI. What is this? This is the 25%. The 25% you can get a deduction from that. So now in here, you can get. You see it? All this. How they calculate that 25%. to get to as additional deduction. There's a new law in 2018. A lot of people forget to take this. So you need to make sure you get it right, okay? And then here's a taxable income. It's a tax plus the self-employment tax. And self-employment tax this, and there is an additional medical test as a net investment tax. So at this situation, this client's total income tax will be this. You remember they only report 25K in W2. They pay an estimate tax. So therefore, they have refunds. So this refund, they're going to apply for the next year. So here's how they works. The next year, they're supposed to put 34,200 per quarter. And the first quarter is already have 3,005 because it's overpayment from the last year. The year we just finished. In the last, they're going to do like this. Okay. And this will become a credit for the year of 2022. Now for state of California, state of California, we end up a huge tax because I haven't put in the estimate tax for state of California. That is. So normally in those situations, let's say if they should have been put estimate tax like this, oh, sorry. Let's say if they would have been pay estimate tax like this, this 36,000 will become a credit. Well, those 48,000 will become a credit. So now in that situation, as you can see, they are overpayment. That's quite a bit overpayment, and those overpayment is going to be used for next year estimate tax. So now, in this situation, would that enough? Depends. Well, if it's enough, they're not going to generate the estimate tax. Then let me see. Yes. I say like this. The system generated is the first quarter 11,700, which you already have it. The second quarter is 15,600. Now, don't feel surprised and say, hey, how come there's no third quarter for state of California? State of California, they do not, I don't know why they do not check the third quarter normally. And then that's how normal does. Now, can I even out the numbers? Yes, but if you even out a number and then you may end up the second quarter is underpay and then need to pay penalty. So therefore, you should, for state of California, make sure the second quarter is more. It's kind of funny, but that's the way it is. Okay. Any question for these classes? No question? Let me summarize. Today, we talk about W2. We talk about dividend. we talk about the K1 from the partnership. And we talk about the partnership K1 subject self-employment tax. We talk about the partnership K1 also qualifying for the QPI, 20% additional deduction, like here. And we talk about Schedule C when you receive the 1099 NEC, and we add on those reasonable amount of expenses. Let's say if the client provide those information. Okay. So now we are going to conclude today's training. And thank you very much for today's training. Have a great night.
Thank you. Good
Bye-bye.
night.
Bye, guys. Bye.
Bye bye.